Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, despite everything that we've seen over the past couple of weeks, despite earthquake, despite a hurricane over on the East Coast, and not to mention all of that market volatility, it is still all about the economy, and that is what leads our agenda this week with our EVP of Zacks.com, Steve Reitmeister, our senior stock strategist, Kevin Cook, and we can't leave out that market technician, Kevin Matris.
We try. The can't. He won't go away.
We wouldn't have as much fun without him. Come on.
That
now.
is true.
Steve, I'm going to start with you because I was a little concerned this morning when I saw what you wrote that you are more bearish now than you've ever been in the past 2 weeks. That concerns me when I hear you talk like that.
Yeah, the market is going to chop around in a range for a while until I think more people are convinced of whether there's a recession or a recovery. And so, therefore, I think a lot of people were reading too much. Oh, look how it raged up till Dow 11,500. Well, it did that 2 weeks ago, okay, and then fell apart and fell back down. And really what I was trying to say in that note, and I'm sorry if I made your morning any rougher than it needed to be.
I was really almost frantic when I read this.
The economic data in these last 2 weeks hasn't gotten any better, okay? And in between we've had a negative revision to GDP, which we find out that the second quarter was only 1%, which is getting far too close to that zero mark.
Yeah.
And then we have consumer sentiment that has been falling apart. And then this morning, as we're taping on Tuesday, we have the consumer confidence coming in lower than the lowest estimate. And even though those things have marginal success in gauging where things are going to go, but if consumers are worried, it usually does affect their purchasing decisions, which is not good for the economy.
But let's get back to that GDP report that we got last Friday. There were people out there who said, yeah, the headline wasn't that great, but the internals of the report had a little bit more positive bent to them.
And I read some of that. I think Shiraz did a great job on that as well. But here again, I'm finding far too much of what happened in the first and second quarters having very little to do with where we're at right now. Okay. The world's, or the United States kind of started to crumble once we started having these discussions about the debt, okay, and all this apocalyptic Armageddon talk. And then they have a seeming Armageddon and what happens with the stock market, and it seems to have a self-reinforcing policy. And so if you take a look at the economic data since the beginning of August, we find it deteriorating, and that is what I'm looking at, and that is why I'm concerned about what is to come.
Right. All right, well, Kevin Cook, one of the key pieces of economic data out this week is the jobs news. From the government on Friday, from ADP on Thursday before that report. Give us a little bit of a preview. What are you looking for?
In addition to that, the manufacturing data this week will give confirmation about recession. So the unemployment numbers all year long were telegraphing a soft patch in the economy, right? And then we were waiting. We finally got confirmation with these GDP numbers. So I was saying all summer, we're not going to get any kind of QE3 from Jackson Hole, and that Ben Bernanke would turn to Barack Obama and say, now it's your turn. This is exactly what's happened. And the timing is incredible here because what did Obama do yesterday? He replaces Goolsbee, who was on his way out, with a guy named Alan Krueger, who is a jobs economist. He's from Princeton. He worked at the Treasury. And this guy is in favor of job tax credits. And we know Obama's going to have a big speech next week. So this is going to be the focus. And he's brought in a heavy hitter here. Krueger focuses on something called the employment to population ratio, which is, let's not look at an unemployment number. Let's look at how many people are in the country and how many are actually working. That has been just sticking below 60%. So he's focused on that. He's talking to Obama about it. So we're going to get some new proposals next week. And one thing that Alan is in favor of is infrastructure jobs. And if you look at this employment to population ratio, I think it makes common sense that it is where it is because of technology and productivity and jobs going overseas. So maybe that has become the new normal in this last decade.
Okay.
So whether or not we get QE3, we're probably going to get a good jobs program next week.
I'm going to come back to that QE3.
We're going to kill technology. That's the way to get more people employed, right? Let's go back to the Stone Age.
Kevin Matris, if the stock market is in fact a forward-looking mechanism, then after what we've just discussed with these two gentlemen, what's the market telling us about the near-term future?
I think the market is taking a wait-and-see approach. I think we need more economic data. I think we're going to see this in the coming weeks. And in the coming months, and until then, I think we stay within this well-defined range. It's a big range, but I think that we are going to stay within this 1,000 area for the S&P, and you have the high mark of around 1,250 for the S&P. There could be a tremendous amount of volatility, but until we get a clearer idea as to where the economy is going, this is what I think is going to happen, which means it's going to be a trader's market.
All right, so Kevin Cook, no QE3, and Steve, you can jump in on this too.
We didn't get
out
it.
of Jackson
Right.
Hole. Do either one of you think there's going to be QE3
I
going
do now.
forward?
With the bad data we're getting, consumer confidence, and if we get more bad manufacturing data, it's going to be some shock and awe like we haven't seen yet.
Yeah.
Okay, you agree with that?
Especially with Europe, too.
Well, yeah, I just want to say, I think the Fed or Bernanke, he made a very telling move by extending the next Fed meeting to 2 days as opposed to the normal 1 day, so they can talk about this very topic. And he said a long time ago when we were growing at 2%, that if the economy significantly weakened, he may do something. They just cut GDP in half. That, to me, is pretty significant.
Is it a question of when rather than if?
Yeah, I think they've been very clear that they're very afraid of, the Japan syndrome, deflationary spiral, and so anything that looks like we're seeping into that. And we take a look at bond rates. Obviously, bond investors are telling you they're a little bit concerned about deflation in the future. So he's very much shown his hand in the past that he's willing to do just about anything to stave that off. But here again, the problem is, does he have any good ammo left? So there could be QE3, QE4, and QE7.
Right.
But
What form?
But is there anything in there? And that's a great point that Kevin made, which is that Obama said all along, I can only do so much, and then the government has to kick in and do some other parts. And so, let's talk about a jobs program.
Bernanke said he could only do so much.
Yeah, that's right. And there's a fiscal part, fiscal stimulus part, and there is also some austerity so that the debt doesn't get out of control, which is almost saying two opposite things. Like, hey, you guys got to give some fiscal stimulus, and oh, by the way, don't spend too much money.
Right.
Okay. Yeah.
I can say that the best part of that Jackson Hole speech was when he castigated Congress and the administration for not doing anything. So they really said, step it up, and I think that's what the administration is going to try to do. Yeah.
All right, Steve, give us your top stock pick.
I'm going with Walmart, just safest of safe at this current time. Back in 2008, market fell 37%, and Walmart was one of only 30 some odd stocks in the S&P 500 that actually went higher. You got a 2.8% dividend to help cushion the blow. And simply, if there is a recession, people do ratchet down their buying habits, and so going to a discounter like Walmart will generally do better.
All right, Kevin C.
CVR Energy, a refiner out of Texas, and they have operations in Kansas, symbol CVI. I'm a bull, and I'm bullish on energy, so oil stays above $80 here, no recession. They also own a fertilizer company that makes urea ammonia nitrate, UAN, and that is a partnership, trades under the stock symbol UAN. Both CVI and UAN are Zacks #1 ranked stocks. CVI is the majority owner of UAN. I like them both, $2 billion market cap companies. So buy CVI if you say no recession and you like oil above 80.
Kevin M.
Mine is Lionsgate, ticker LGF. Steve, do your thing, will you? They are in the movie and TV production industry. They do pretty much everything in regard to TV and movie production. They are Zacks ranked 2, great growth rates. What I like about them is there's a lot of buzz around this possible blockbuster franchise called The Hunger Games. Either way, they just broke out of a really nice consolidation pattern. My price target over the near term is $9. That is a 19% increase from here. But I believe if this Hunger Games franchise really takes off, you could probably even see Lionsgate become a major player and even double.
All right, that's the latest from here. In the meantime, until our next get-together here at the Roundtable, you want to keep an eye on Zacks.com's homepage, because there is where you're going to find all of the latest thinking from these gentlemen and others as far as the economy and the market is concerned. With everyone here, I'm Terry Ruffalo.